Welcome to the Grow Your Business and Grow Your Wealth podcast with Gary Helt. Gary is an expert in helping business owners put together a plan that will provide a better future for their businesses, themselves, and their families. On the podcast, Gary interviews other professionals who share his vision, and together they share secrets and strategies any business owner can use to build a better financial foundation for your business and your life.
Hey, welcome back to the podcast. This week, we bring back our guest, Ash Ahluwalia, and he is, during his first interview, he was very, very informative with Social Security and benefits, and I think it's helping us all make smarter decisions. But I wanted to dive deeper in this, remind you guys that Ash is a national Social Security expert and head of Social Security planning at One Team Financial. Last time he helped us, simplify the system that many people have questions about, and there's a ton of rules and things like that. Today I wanted to get more into, divorce and the benefits of divorce, or maybe not the benefit of divorce, but some of the things that may come out of divorce with Social Security. And some of the costly mistakes that people make in going through divorce when it comes to Social Security benefits for now and in the future. So welcome, Ash. I appreciate you joining us.
Thanks, Gary. Appreciate it. Glad to be here.
Last time you said that Social Security is, was too big for one conversation, and we definitely, definitely pushed up against timelines and what we were doing. So. Has anything changed with the big beautiful bill and things like that with Social Security before we get into the divorce side of things?
Yeah, no, I'm glad you asked that question because there is quite a bit of confusion out there regarding the taxation of Social Security and did the one big beautiful bill make Social Security income tax free? So I'll start with this. The short answer is no, but I'll start with this. The way that Social Security calculates how much of your Social Security benefits are subject to taxation, none of that changed. Mm-hmm. Literally nothing on the Social Security side changed. So when you're looking at whether you have to pay income tax on your Social Security, you calculate something called provisional income. Provisional income is your adjusted gross income plus half your Social Security plus muni bond interest. If you add all that up, and if you're married filing jointly and that provisional income's over $44,000, you have to include 85% of your Social Security in your federal taxable income. If it's between 32 and 44, you have to include 50%. Under 32, you don't have to pay any taxes on Social Security. So determining how much of your Social Security is subject to income tax depends on provisional income. Nothing in the big beautiful bill affected that calculation. This is something that accountants would call an above the line right. calculation, right? So nothing changed with respect to that. But the big beautiful bill introduced the senior deduction. The senior deduction, to qualify for it, for starters, you have to be 65 or older. And if you're married filing jointly, if both spouses are 65 or older, they would both qualify for it. And it can be up to a $6,000 per spouse deduction. But it's an income tested benefit.
Right.
So if your modified adjusted gross income under 150,000 for a couple, you get the full 6,000. If it's over 250, you don't get any. And between 150 and 250 is phased out. And a little different for single people, it's 75,000, 175,000. But the point is, that deduction, in many respects, is just an additional standard deduction. Right. It's a below the line deduction. And you do not need to be collecting Social Security to qualify for that deduction. It's a deduction against any income. It's not specific to Social Security. You could be not collecting Social Security to get the deduction, right? You could be collecting Social Security and not qualify for it for income purposes. So one has nothing to do with the other, but somehow it's been conflated, right? Where because seniors get it, it's like, oh, now you don't have to pay tax on Social Security. Like they kind of connected those dots. And I'm
Right.
like, no, one has nothing to do with the other. So will my clients have to pay income taxes on Social Security? Well, the question is, did their provisional income change? And unless it came below 44,000, and I have to say, I don't think I have any clients with provisional income under 44,000. So
Right.
they have to include that. Now, the majority of states do not tax Social Security. New York, New Jersey, Pennsylvania, we don't tax Social Security. So this is really a federal tax. I know it aggravates people that they paid Social Security taxes their whole life, then they get their Social Security, and now they got to pay taxes on it.
Right.
So, um, but I would say sadly, the majority of Americans are not paying taxes on Social Security because their income is so low. 20% of people collecting Social Security have no other income. And over 60 million Americans get a check from Social Security. So there are a large percentage of the population that don't pay taxes or pay little taxes. But if you were paying it before, you're probably still going to be paying taxes on it.
Yeah. I think that the way the big beautiful bill was rolled out and talked about, oh, no tax on Social Security, no tax on tips, no tax on overtime. And when everything kind of finally got flushed out and everybody understands, okay, there's income provisions and different stuff like that, that so much of it was that all of this stuff is still taxed. It just happens to be once it gets put on your tax return, how it's going to be affected. And
Right.
I think that a lot of people didn't understand that, going into this. And
And
that's
it's only a 4 year
correct.
benefit senior deduction 2025 to 2028. So it's a very short-term break. Yeah.
Right, right. So what we're just telling our clients is like, hey, is there a way that we can use this to help offset some other income and so forth? So we're certainly trying to take advantage of it. Um,
Absolutely.
so um, divorce benefits. Let's talk
Yes.
about that and start there. What's the biggest misconception divorced people have when it comes to claiming Social Security?
Well, the divorce benefit rules are quite complicated in that there's certain basic criteria you have to meet in order to even qualify for the divorce benefit. So I'll just run through those. Your marriage has to last at least 10 years or longer. Okay, and I would say there are exceptions to these rules because that's the way Social Security rolls, right? It's like,
Sure.
here are the rules, but then there's all these exceptions to the rules. But anyway, you have to be married for at least 10 years or longer. You and your ex have to be 62 or older. You couldn't have remarried, okay? Because if once you remarry, you can't collect benefits off a former spouse, although there are some exceptions. But basic rule is no. If you remarry, you can't collect off a former spouse. And your divorce has to be at least 2 years old or longer to collect off an ex. Now, if the ex-spouse is already collecting, you don't have to wait the 2 years. So that is an exception to if you were a married couple, you'd have to wait for your spouse to file to collect off of them. Ex-spouses, hey, they could be so upset. They're like, I'm not filing. If you're going to get money off of me, well, after 2 years, it doesn't matter. You can
Right.
collect off of them. So those are the foundational rules. But I see people make some of the basic mistakes. For example, I had a client, she got divorced after 9 years and 9 months of marriage.
Oh,
And she said, is that a problem? I said, those 3 months that you weren't married cost you somewhere between 500,000 and $1 million because she was a stay-at-home mom. Her ex was a surgeon. She would have been entitled to half of his benefit and 100% of it if he predeceased her. Now she can't qualify for anything.
right.
So that's that. The other thing is who's eligible? You think all you had to do was, meet those rules and then you get to collect off your ex regardless. Well, that's not the case. All right. Similar to the spousal benefit, the divorce spouse benefits, what they do is they look at each of the ex-spouse's benefits at their full retirement age. So I'm going to do this, Gary, by an example because I think it's easier.
Yep.
Um, let's say the wife's benefit or the ex-wife's benefit was 800 a month. She was a stay-at-home mom. She didn't have a lot of years of earnings. So at her age 67, her full retirement age, she could collect $800 on her own. Her ex-husband's benefit at his full retirement age is $4,000 a month. Well, she's entitled to the greater of her own or 50% of his. Well, 50% of his is 2,000. So she's entitled to 2,000. Her own is 800. So what she really has is two components. She has her own 800 plus another 1,200 that I call a spousal add-on. All right. Or in this case, an ex-spousal add-on. If her benefit was more than 2,000, if it was 2,100, she could not collect anything off of her ex-spouse because the most she can get is up to 50% of his. So just for starters, she needs to have a benefit. Now, if she never worked and her Social Security benefit was zero, she's going to get 2,000. It's all going to be an ex-spousal benefit. So first of all, you don't compare what your ex is collecting because maybe your ex waited to age 70 and he's getting 4,000 or 5,000. You don't get half of that. The most you can get is half of what he would have had at his full retirement age.
Okay.
And if he had filed early, it's not, he took a reduced amount, 25, 30% less, but they don't look at that number. They look at what he would have had at full
Okay.
retirement age. So you're always comparing full retirement age benefits. So first of all, there's a lot of confusion around it. So I see that a lot. But sometimes I think I've had clients say, well, I can't collect out my ex-spouse because he got remarried. Well, that's his
Yeah.
problem, not your problem,
Right.
right? Like his new spouse can collect off of him and whatever their married rules are, but that did not affect your benefit. I see that oh, my ex-spouse died, so I have to split the survivor benefit with his new wife. I'm like, no, you don't. You both get 100% of his benefit amount. There's no sharing of it. Yeah. So, if the guy was married 3 times and he died, all of the ex-spouses, if they were
Right.
married for 10 years or longer, are gonna get
So,
that.
so let me ask a question. So go back to your example. So if, um, you know, I'll say me, it's like, so if my ex-spouse starts drawing on my Social Security, she'll get 50% of whatever mine is. Now, if she's still alive and collecting and she's already started collecting and I were to pass away, does she now get the bump up to the 100% or does she stick with the 50% the whole time?
Yeah. Okay. So in your scenario, right, she qualified for the ex-spousal.
Hmm.
And just to be clear, although she's drawing a benefit against yours, it doesn't take any money away from you.
Correct.
All right. They're looking at your benefit amount to determine what she gets, but it doesn't reduce what you get. So, because sometimes people get
People think,
confused with
yep.
that as well, right?
Hmm.
So for her to qualify for a survivor benefit, right, as long as she didn't remarry, she would be eligible to collect 100% of the benefit you were collecting,
Okay.
okay, or your full benefit. But it depends on her age at the time it happens. If she filed for the spousal benefit at age 62 and the next day you got hit by a bus, right? She'd be eligible to collect 100% of your benefit, but she's only age 62. She to get 100% of yours, she would have to wait to her full retirement age to get the full survivor benefit, or she could take a reduced survivor
Okay.
benefit. Now, survivor benefits, you're eligible as early as age 60, but the most you can get is 100% of what that deceased spouse was collecting, or you have to be over full retirement age to get the 100%, right? Because if you're not at your full, it's not how old they were when they died. It's how
Right.
old you are at the time they died and the time you applied. So I've had clients, let's say the ex-spouse's benefit, they were collecting the ex-spousal, and they could defer their own, right? They have their own benefit, which is small. They could start with one and switch to the other. I've seen that happen. But the one gotcha you have to be careful is if you have an ex-spouse and you remarry, you're not eligible to collect any benefits off of that ex-spouse, with one big exception. Let's say they were collecting the ex-spousal benefit and then she got remarried. Now she can't collect the ex-spousal because she got remarried. And then you died.
Hmm.
Normally, she would not be eligible to collect that survivor benefit because she got remarried. But the one exception is if you remarry after age 60 and your former spouse dies, you can. So I had a client who was age 59 and her ex passed, and she was going to get remarried. And I told her, no, you have to wait a year because if you get remarried now at 59, when you turn 60, you can't collect off of that ex-spouse or the former spouse anymore. But if you remarry after age 60, you can. So those are the kind of little traps
Oh
that,
yeah, yeah. I was gonna say, Ash, there's like so much that goes into this, and it's like, for the listeners, it's like, you guys got to make sure that you know your advisor thinks, I'm going to say many of the advisors, many of the CPAs think that they know this stuff. And I can tell you, I feel like lots of times I know a lot about it, but nowhere close to what you do. And that's why you're
yeah.
the expert at this. And but there's so many little nuances with it that you really got to be careful.
Yeah, and in fact, I'll share another one with you because when I teach classes to matrimonial attorneys on divorce, I said, I'm sure you all know this, right? How long does your marriage have to last in order to collect off an ex-spouse? They're like, all the hands go up, 10 years. Everyone knows it, 10 years. I said, are there any exceptions to that? They're like, no. And I'm saying, well, there actually are.
Right.
So here's one, because I had this case, Gary. It's crazy, but it happened. This couple married each other, and after 5 years of marriage, they got divorced. 18 months later, they remarried each other. It happens.
Right.
But after the 10th anniversary of their first marriage, they got divorced again. So for that 10-year period, they were married, except right in the middle for 18 months. So they were married a total of 8.5 years. So I asked these attorneys, do they qualify to collect ex-spousal benefits? They said no, because the marriage didn't last 10 years. I said they actually do, because there's an exception that says if you remarry the same person by December 31st of the following year, you're deemed to be married in each of those years, so you qualify.
Wow.
Yeah. So what does that tell you? I say it tells me there was a congressman that had that situation,
Yes,
right?
100%.
There's no reason that should be in the code.
Right.
That doesn't make any sense, but
That's too funny. Um, Give us some, so I mean, you've given us some nice examples here. What are some, I'm going to say some other oops that somebody can make when going through this that will cost them with the Social Security?
yeah. Well, I would just start with sort of traditional married couples scenarios. All right. The area I see a lot of mistakes is in the spousal benefits because there used to be three different kinds, and then there was two, and now there's only one. So you may remember filing and suspending. I'm not
Hmm.
going to go into it, but that was a popular strategy
Yep.
where you could collect, then suspend, and let your benefit grow so your spouse could collect off. Anyway, long gone. You used to be able to file a restricted application where you could collect off your spouse while you deferred your own and then take your own. And your spouse wouldn't even have to be filing. You can't do that anymore. But the one benefit that still exists is where one spouse's benefit is less than half of the others, right? And where I see it a lot, I have professional couples say, let's just say the husband's a doctor and the spouse is a stay-at-home mom. And so she has a benefit, but it's small. It's maybe, I'll use the example I used before. Let's say it was $800 and his was 4,000, but he doesn't need the money. He's working. He said, I'm going to wait to 70 to get 5,000. Why pay taxes on it? Let it grow. It's growing
Right.
at 8% a year. Why don't I do that, right? So what I find is that is almost never the best strategy, first of all. And they only think about the higher earning spouse, who's typically a little older. They're saying until he files, they're not even thinking about the wife's benefit. And when I crunch the numbers, it almost always makes sense for that younger spouse with the smaller benefit to start collecting early. If they don't have earnings above the 24,480, right? If you file early, there's an earnings test. So if they're a stay-at-home mom, they don't have work or earnings, they can start their benefits early. It'll be slightly reduced, but statistically speaking, in that scenario, women outlive men, statistically speaking, right?
Right.
And so at some point, she's going to switch to his check anyway. So what I find is a lot of times it makes sense for her to collect and for the husband not to wait to 70, but to start sooner because his check triggers two checks, right? He gets his 4,000 at full retirement age plus another 1,200 spousal benefit that his wife's going to get. So by deferring, you're leaving 1,200 a month on the table, maybe for 3 or 4 years,
Right.
and you haven't even filed for the wife's benefit, which is lower. You just kind of let like that benefit, the 800, yeah, between age 62 and 67, the 800, like it's growing, but you're getting half of his benefit anyway. Why are you
Right.
trying to increase her benefit? You're just eating into this so that it doesn't really pay to wait. And so when you're looking at Social Security, people tend to look at it separately as one spouse. Like the husband saying, oh,
Yeah.
if I take it at 66, I get this. If I wait to 70, I get that. And if I die at 82, he goes, I said, look, your check can live on 10 years after you're dead as a survivor benefit, right? So you
Right.
always have to look at it as do the planning as a couple. And people tend not to do that, and they tend to dismiss the smaller check amounts. So that's sort of like for most couples, and I'm doing planning, I always want to know what other benefits are there. Sometimes there's a second marriage where now they have a minor child.
Mhm.
I have an attorney client. He's 67, second marriage. His wife is 57, but they have a 14-year-old daughter. Well, he's got
Right.
to put this daughter through college. So he's thinking, geez, maybe I should collect my Social Security. I'm getting whatever, 4,000 a month. That's 50,000 a year, 4 years, a couple of hundred. That's a
Yeah.
good benefit, right? I said, well, not only that, but if you file now, your 14-year-old daughter can collect 50% of your full benefit amount till they're 18. So that's
Wow.
4 years, right, of that
Yeah.
benefit. And your spouse who's a stay-at-home mom, she doesn't have earned income. She can get a child in care benefit also equal to 50% of your full benefit. So he's getting 4,000. Each of them are getting two each. That's another four. That's 8,000. Now there's a family maximum, which would probably drop it down to 7,000, let's say. But still,
But
7,000
still,
a month,
exactly.
that's
Exactly.
84,000 a year for 4 years.
Right.
I
Right.
mean, who would have thought you could fund a kid's college off of Social Security? But
100%.
who doesn't tell them about that? Social Security doesn't tell them, right?
Yeah.
You're not getting a letter from them saying, oh, by the way, you're eligible to do this or do that. Um, so there's so many planning opportunities that get missed. There's over 2,700 rules, and you're going to miss something. But I'll say this: I'm just writing an article right now called "Why Social Security Arbitrage Matters for High Net Worth Retirees." Now you're going to say, "Geez, if you're really wealthy, like north of 30 million, right? You have an estate tax problem, right? Because the estate
Mhm.
tax exemption is about 30." So let's say my client, because I just had this guy, 2 weeks ago, he's worth $100 million. You think he doesn't care about Social Security, and he
Mhm.
doesn't. But he said, my accountant said I should talk to you. I said, okay, well, here's what we're going to do. Everybody's telling you, since you're worth $100 million, who even cares about Social Security? You can even bother filing, right? And the last thing I want to do is take it and start paying taxes on it. So I'll just defer it, max it out. Maybe I'll take it at 70, right? And I tell him, look, I want you to do the exact opposite. Take it as soon as you can. He says, why? I said, Social Security to you is worth somewhere between 2.5 to $3.5 million, guaranteed 100% tax free. He said, Social Security is not going to pay me that. I said, they might. I said, I don't want you and your wife to wait to 70. I want you both take it today at 66. You get about 75,000. After tax, you get 50. We're going to take the 50,000. We're going to gift it into an ILET, into an irrevocable life insurance trust. It's going to buy, say, a $3 million life insurance policy. So for one premium paid by Social Security, you created a $3 million 100% income and estate tax free asset, which you can use to help pay your state taxes or for other legacy planning. So for that purpose, If he had just collected the Social Security, he would have paid income tax on it. Then it would have piled up in his estate. He would have paid a state tax on it. There would be a 70% tax on that Social Security. I converted a potential income stream because I don't know if he's going to get 20 years of checks or two checks, right?
Right.
Who knows? But now I capitalized that potential income stream into a guaranteed tax-free asset for legacy planning. So even for the very wealthy or people who think I don't need it, why would I'll delay it. Why pay taxes on it? You have to integrate it into an overall financial plan and say,
Right.
where does this make sense for me and our situation? And so do you have to be worth $100 million to do that? Absolutely not. I had a client who she was 63, divorced, retired from J&J. She had a daughter and a granddaughter. She wanted to put $500,000 in a trust for the granddaughter. And I said, don't do that. Let's get Social Security paid for it. So we took part of her Social Security check, bought $1 million policy in a trust for the granddaughter. I said, now that you know that she's getting this $1 million, you can spend all your money, right? Take it,
100%.
knock
Yeah.
yourself out. Because as long as you're around, you're going to take care of this granddaughter. But God forbid something happens to you. You don't have to hold back. You don't have to move assets, your own assets, into a trust and deny yourself. We've covered that risk, and Social Security is going to help finance that. Because she had a pension from J&J and what she was fine. So
Yeah.
again, she's not worth 100 million, but the concept is what's the smartest and best use of those dollars? Maybe it's to finance long-term care insurance. Maybe
Right.
it's that might be a missing piece of their overall plan. Um, so again, there's no cookie cutter solutions when it comes to Social Security. So you certainly have to navigate the rules, make sure you're not leaving any money on the table, right? But then you have to step back and say, based on their particular situation, their health status, right? How long do they plan to work? What other money do they have? A lot of factors come into what's the best time to file and what to do with those funds.
Right. So, Ash, let me ask this question, and I'm not trying to bash the CPA industry or financial advisors or anything, but what percent of CPAs or financial advisors do you think truly know Social Security?
Yeah, well, I'm not trying to bash anybody either, but as a recovering accountant myself,
Right.
I can say,
Exactly.
and as a certified financial planner, I can say that the knowledge is very low. I would include myself in that. When I first looked into Social Security, I didn't know that much about it. But when I scouted around to try to find somebody who did, I realized there isn't
There is.
anybody. I'm like, this is ridiculous.
Yeah.
So I studied, I got a couple of certifications, and I've worked over 2,000 customized plans. So the awareness level is very low as far as doing a deep dive on it. But
Yeah.
I would say a lot of professionals, they're the trusted advisor, right? The CPA is the trusted advisor, and the clients ask them these questions, and they don't want to not help. So they're just trying to be helpful. And the standard answer I hear them say is, well, if you need the money, take it now. Otherwise, wait, you'll get more.
Yeah. Yep.
Like something
100%.
like that.
100%.
And that is,
No,
I mean,
I mean,
it's
I
something,
like your,
but
I mean, I like you, really like your recommendation of, the example you gave where, the mom wanted to put money away from the granddaughter. And, usually you would worry about, okay, I'm saving up, I'm throwing money in 529 plans, I'm doing all this stuff. Why not take my Social Security and put it into, the ILA trust and a life insurance policy that's going to
Mhm,
pay out big money for this person. And oh, by the way, they're not going to pay tax on it when they receive it.
absolutely.
And I just think that that's one of the things. And I've, again, it's with all the social media and everything that's out there, there's so many people out there that are preaching stuff that's not true. And I look at, so many advisors and CPAs that are having these quote unquote Social Security seminars.
Yep.
And they're not talking about any of this stuff.
No.
I know before it used to always be the, take and suspend and all that kind of stuff. But, now that all of that's gone, I mean, there is, and you've just talked about it today, there is a ton of planning that can be done with
Hmm.
this where it's going to be to your benefit. And you really need to talk to somebody who really understands this stuff. And obviously, Ash, you know it very well. Um, and I think that one of the things people don't think about is the child's benefits for someone under the age of 18 that has maybe an older parent. Why would you wait if I can now, my child can start getting half of my benefits. And then, like you said, hey, we can use that to pay for school because the kid's not going to pay tax on it because their income is too low.
Income flow, right?
You know,
Exactly.
so, in that example, it's like, okay, they're getting $24,000 a year tax free. Why not use that to put, and I mean, you do that for the,
Or
like you said, for those 4 years,
yeah,
you
that's
look
a
at
hundred
that
grand.
money,
Yeah.
yeah. And then now I have money to go to college that I didn't have before.
Yeah, absolutely. And the child and care benefit probably would have been missed on that one because the spouse
Yep.
didn't have earnings, so she could collect till the kid was 16. So that's still a couple of years at 50 grand. So money's being left on the table all the time. I think
Yeah.
Social Security estimates over $10 billion a year in missed benefits. That's a lot of, you know, money to leave on the table, I think.
Oh, I
Uh,
agree.
I've taught a class, I teach a lot of continuing education to CPAs.
Hmm.
And once in a while, I'll do like a 2 hour class, which is a lot of material. But I'll
Yeah.
say at the end of it, if I did my job right today, you know less now than when I started. Okay.
Ash, I can tell you that I certainly, this being our second interview, I've definitely learned a lot. But the biggest thing that I know is that if I have somebody that's dealing with this, I'm calling you
Yeah.
because I don't know anything compared to what you do about it.
Yeah.
Um, you talk about that you're writing articles, you're doing, you do the continuing ed and stuff like that. Um, tell our listeners where can they find some of this information, um, on a regular basis coming from you.
Well, if they go to our website, oneteamfinancial.com, they'll find a lot of my articles, videos, like when I do speaking engagements, webinars, but a lot of speaking engagements, we record them and we put them on the website. So we do that. We have our firm, we do what we call a Let's Talk. So once a quarter or so, one of my colleagues who heads business development, she'll interview me about Social Security, interview my other colleagues about other topics. And then anybody can dial into that. And so you'll see that posted on our website as well. So that would probably be the easiest way
Yeah.
to connect with me. Yeah.
Yeah, I think, anybody who's listening to this, it's especially if you're getting close to that age, you really need to go on and listen to some of the interviews with Ash. And then, if you talk to your financial advisor, ask them, hey, do you have a Social Security expert on staff? And if so, what are their qualifications? So tell us again the certifications that you have that make you the expert.
Make me the expert. Okay. So
Besides the years of doing this,
yeah.
so
Besides the years of
that's
doing it,
where a lot of it comes from. But you do also have certain designations that if somebody has gives you a little bit of a better clue if they know what they're talking
yeah, I think the most popular one in the industry is the NSSA, so National Social Security Association certification. I've been their advisor of the year before. I see financial advisors who at least want to get some basic understanding of Social Security will take those courses and get that certification. There's CSSCS, so it's a certified Social Security claiming strategist, which is a similar designation. It's taught by a tax attorney, and she did a great job. But I'll say getting the certifications is important. Having the sophisticated software that can run these scenarios, because a lot of the generic software out there really can't do the kinds of stuff that I'm doing, right? You need high-powered software to do that. And those software companies also have specialists on board. So I know when I have questions, I contact them and say, I'm trying to run this scenario. Sometimes they'll say, well, actually, no one's ever asked us that before.
Right.
So we've got to code that. We haven't coded that one yet, but okay,
Right.
we'll take care of it. But I think it's just doing a lot of cases. And then when we have issues, we go and look at the actual Social Security code. I will warn you on this though, that ChatGPT is not always right.
Yeah.
I've had clients do that. I've looked at it and I went, wait a minute, that's not right. So you always have to beware when you're on ChatGPT if you're trying to get the quick answer. I mean,
Yeah.
there's a lot of great information on it. Don't, you know, I appreciate what's out there, but
Yeah.
if you're making, you file once, right? You want to get it right. And for a lot of people, Social Security, unknowingly to them, is their largest retirement asset, right?
Yeah.
They're going to get well over $1 million over a normal retirement. Many clients over 2 million. So it's a big deal, and getting that filing strategy right is important. So I would just say that ask your financial advisor, do you have specialized training in Social Security? And if they don't, and they know there are people out there like me, they should probably, at least for this piece, I would say the more enlightened financial advisors I've run into said, Ash, I don't know it. I'm never going to know it. I don't want to know it. So if any of my clients need help, I'm going to refer them to you for that
Right.
one slice. And that's doing right by your client. So I would say just ask that generic question. Do you have specialized training in it? And if the answer is no, but we don't really need it, we, our software will handle it. Well, then that's probably
Right.
not the best answer.
Yeah.
Right.
And just to reiterate, and you already said it, but just to reiterate, you will work with people and their financial advisors to answer their
Right.
Social security questions and planning and so forth. So,
Yeah.
again, listeners, that's another thing that Ash will, work with your advisor. You don't have to get rid of
Switch or anything. No.
yeah, you don't have to get rid of your brother-in-law as your advisor, unless you really want to. So otherwise, Ash is here to be able to do that.
Yeah.
Um, again, Ash, I really appreciate your time. I learn a lot from you every time. I have more questions to go into, so we're probably going to have to do a 3.0. Uh,
Yeah.
what did I not ask you about Social Security and divorce that you wish I would have?
Well, I would say don't expect that your divorce attorney is going to understand Social Security. Okay,
Right,
it's not an asset that gets carved up like the 401k, right? So the divorce attorney
right,
is not. So I would say before you even pull the trigger on the divorce, we should have a conversation because you want to know, are there any pitfalls like I talked about with the survivor benefit or getting remarried or um, maybe you were a stay-at-home mom and you have like 36 credits to get. So you have no Social Security benefit, but geez, if you earn $8,000, you get four more credits and now you have a half a million
yeah,
dollar pension. So it's a matter of ideally before you get divorced, review the situation so you can go in with eyes open, right? And so you're not missing out on anything. And if you've already been divorced and you're thinking of getting remarried or you want to know, do you qualify? Again, seek advice on that. I always offer a 15-minute complimentary call to anybody. So when people call me, I just talk to them. They tell me their situation. I try to help them. The only time I charge a fee is if they want a customized plan done. Then I have to do a deep dive and I charge and I discount fees for your listeners. But yeah, when it comes to divorce, there's a lot of misinformation out there and you just want to double check it because you don't want to find out years later, geez, I could have been
yeah,
collecting this benefit.
yeah.
And it could amount to, I had one couple, both of them, they got remarried, but both of their former spouses passed away. And I said, how old were you when you got remarried? They said, it turned out it was 60 and 3 months.
Wow.
They just made it. And I said, okay, well, now both of you can collect like 3,000 a month each
Right.
from full retirement age to 70, max out your own benefits and switch. They would have missed all of that
Oh
money.
yeah.
Yeah. I mean, no one's telling them. Social Security's not telling them.
No, no, no. That's
So
all.
anyway,
That's
yeah.
awesome stuff. I appreciate it. Um, so everybody, if you want to reach out to Ash, if you go to their website, One Team Financial, you'll be able to see, the videos that they've recorded. You'll see the articles he's written, and so forth, and then you can reach out to him from there to get some help, and also tell your financial advisor about Ash and what he does. So, Ash, I really appreciate your time today.
My pleasure. It's great to see you again.
Great. Thanks for joining us today. Again, our guest was Ash Ahluwalia, and he is a Social Security expert with planning at One Team Financial. And I'll see you guys next week.